What's up, guys? Just wanted to let you know about the Blockworks Digital Asset Summit, which is back in New York, March 24th through 26th. We'll have top speakers from leading asset managers, financial institutions, DeFi protocols, crypto companies, and policymakers all under one roof. Think of BlackRock, Coinbase, Robinhood, and more. Follow the link in today's show notes to buy tickets and make sure to use code 0x200 for $200 off at checkout. See you there. Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of 0x Research. Today I'm joined by my co-host, Danny. Danny, how the hell are you?
I'm doing great. I was looking away when you ended the music, hearing the dogs fighting in the background. So
I actually didn't mean to do that. I don't know what happened. I probably messed something up at some point, but I can't let something so small ruin my mood, even though I really want to let it. I think before we get started, and we have not a lot to discuss in crypto, but a lot to discuss in terms of war, I want to give a massive shout out to my editor, our editor, Steph, who is going to be getting married over the next few months. I think next month or the month after. So just want to wish him and his fiance all the best. Woo! Okay. More serious note, Danny. Actually, how are you doing?
doing good. I feel like recent conversations internally here they've been a little bit of a whipsaw. We were just talking before. People were saying, asking the other day, "What are you guys buying?" And now I feel like I had the opposite conversation this morning. People saying, I could really see more downside. So,
I mean, look, I'm not a big bottom caller, but this is like the type of conversation that you have. I think, I don't know, everyone's super like trigger happy to sell all the time, and I'm a buy like sub 70. I've already said it on the pod. I'm a buyer. It can go lower. I've heard some people say 58K. Whoa, another 20% drawdown. Oh no, like it's, if you think if you think there is a meaningful use case for cryptocurrencies, which I think there is, maybe it's not digital gold, maybe it's not inflation hedge, but it sure as hell is tokenization and settlement layer. That's what our large traditional financial overlords have decided upon, being the main goal and mission of cryptocurrencies. And I'm very happy to just play ball in that sense. And yeah, like it seems like every discussion that I have, and not just internally, very good. Are they gonna fight again? A little bit. We'll see. I feel like every chat we've had internally at Blockworks, like on these morning calls, it's very much like, oh, 1 week you're buying, 1 week you're selling. I think every chat in general I've had on crypto has been like, oh, 1 week you're buying, 1 week you're selling. And oftentimes when it's like high, people are buying. When it's low, they're like, oh, it's gonna go lower. I think like at this point you just want to be. There's a Swanson Benson tweet that is sarcastic, but I think it speaks the truth, which is like you kind of just want to be DCing spot and chilling a little bit, like relaxing a bit, just like, I don't know. I think it'll be fine at this point. You can hold it down a little bit.
yeah, I think you realize that there's like maybe different archetypes. I think the difficulty is that there's a lot of conversation that happens in this industry, especially because everything is, speculation adjacent and or tokenized and has a tradable like asset, or if it doesn't have a tradable asset, it has like a tradable market for it now with prediction markets. So everything is like can always be a trade if you want it to be. And I think there's definitely like archetypes of people. Like I think if you are the type of person where you believe in something and you like a company or you like Bitcoin or whatever it is, you're probably the type of person who, like you just said, just buy some spot and chill, and you shouldn't really be thinking about, okay, I should sell some here, and then, oh, we just broke, we went back above 70K, I should buy some here, and then, oh, we broke back below 69, like maybe I should sell some here. Like you're probably just not like a level to level or like momentum trader guy if you have like more of a long-term view. But I think these like those views and those conversations kind of get crisscrossed like in the narratives, and like you just have different people kind of talking past each other that have like different ways that they approach markets. So I don't know. I just think it's an interesting. It's not something we talk about. That's probably more of like a 1000x conversation because I think they're more like the active trading show. But we talk about assets in the space, and like certainly like momentum is a big factor here. You can love stuff, but if you decide that you love a protocol at the top of the market and then we trend down for 6 months in a row, like it doesn't really matter. You'll probably start asking yourself these questions of like, oh, maybe how long term is my view? Like, was I correct in the assessment of the valuation at that time? And then maybe you get kind of gold into playing the momentum game at that point, and kind of following the more of the day-to-day, week-to-week movements, which I think personally is what I've tried to avoid more of, understanding that I'm not some super trader or anything. Obviously, when the markets are being absolutely stupid, and just like things go up day after day, it's a great time to kind of like ride the wave. But I feel like we've been in a bit more of, it's generally speaking, crypto's been down, but I feel like more recently it's been sort of choppy. And I think you just probably, if like individually, you need to recognize like what type of investor you are. Are you a trader, or do you have like a long-term view and you're zoomed out and you're like a spot and chill kind of guy?
Yeah. I will also just say one more thing. I think crypto kind of forces you a little bit to be a trader, because of exactly what you said. Like there are guys who really started loving Hyperliquid at $50. And it's like, you know what, man, like it's great. I love it too, but you probably shouldn't start really loving it at $50. And I think we see this a lot actually with these funds sometimes, and I'm sure that they're not actually trading the fund this way, and I'm sure it's like the way that they're just tweeting that is this way. But sometimes you'll see like a guy who is very clearly like well, not ex CFA because he still has a CFA, but like ex traditional financial fund, like an ex hedge fund tradition that trades like traditional equities or whatever, and then they come into Hyperliquid, they come into crypto, and they like look at Hype or look at Pump or whatever, and it's like BTC's at 110K, and they're like, oh, like these are the only things that make money. I should buy them. And it's like, you know what? Like, it does. Crypto just doesn't work that way. It probably the ideal way to trade crypto is probably just to like have maximum a year or 2 years time horizon, and even then, I feel like that's quite long for certain assets. And I think a lot of people come in halfway through that, like at year one, and they're like, okay, well, there's actual assets that make money here, so I'm going to become an investor. When reality is at that point, you probably just don't want to be an investor anymore. Do you know what I like? I think you and I kind of expose ourselves. That doesn't sound right. I think we get exposure to crypto in a similar manner, which is like buy some tokens, large caps, long like at some price it seems cheap enough, you buy it. At some price it seems relatively expensive, you sell it, and then in between you just like buy and sell certain things. I think a lot of people trade that way for what it's worth. Um, I just like I always find it really interesting when there's a level to level guy who puts everything that he has into like a trade for like 1 week, or it's like the people who are like, oh, I'm just gonna buy this and hold it for whatever, like fucking 4 years, and then they always end up doing that at $50 Hyperliquid or whatever, like 4 bill, 6 bill pump or whatever. So yeah, long-winded way of saying I think because crypto is super retail dominated still, it's actually, and there isn't a lot of structural flow. I think it still is very much like a trader's thing, which is why on our morning calls, people are like, "Oh, should we buy or should we sell?" I think it's just the intrinsic reaction to the market, the way that it is set up, or the way
Yeah,
that it is.
I think that's fair too. And something that that James Christoph, shout out, friend of the pod, has always said is that everything within crypto is a trade, except maybe Bitcoin. I think there's typically an exclusion there, but I think you can on the 4-year cycle basis or whatever you want to call it, if that's still in continuation, you could maybe call that a trade as well, if you want to look at it that way, unless you zoomed out, very far. I feel like I do kind of have a similar view to what you just described, in the sense that like I know we've just had these such strong periods of like massive growth and then kind of like, massive pullback disappointment for kind of multiple years in a row from, over a decade at this point. And so I I like the point you made that it's like there are times where stuff looks really bleak and it's like, okay, maybe it's time to like look for what do you think that next thing is, and make bets there. I feel like, in 2022 and 3, that was, it was like the Solanas, it was like, Hyperliquid wasn't even around back then. It wasn't even a token until in 24. So, but there were certainly things that like in that period when people were debating on the day to day, like, oh, should I be getting long? Should I be getting short? It's like, who knows if that's right now or if we need to go crab mode or down for another 6 months. I'm not going to tell you the future, but I think to me personally, it's like the market is always much more interesting when I'm looking at lows than when I'm looking at like a new all-time high in terms of
What
making a
about?
decision about like,
Yeah,
putting a big bet into something and then just like deciding to hold it.
yeah. I think I agree with you first of all, and like it's always been historically harder for me to sell than it is for me to buy. Like I think, and I specifically mean like at when Bitcoin drops below a certain level that I have in my mind, I think it's easier. But even in that case, it's 22, 23. I also did the thing that was like, oh, like BTC's at 25K. Well, I missed it at 20, so I'll just wait for it to go back. Like, and I think everybody kind of did it with like certain amounts, like certain tokens. And it just rips in your face. And it's like now when you look back at it, like what is Bitcoin at 70 grand? Like 20 to 25K difference is minimal. Um, and it went up to 125. So I agree with you in that sense, and like everybody was arguing about the minutia, and people were saying, "Oh, like Sailor needs to get liquidated first, and like Binance, they need to go down." Um, about Sol, they were like, "Oh, like it's 8. I want to buy it at 3 because that's the golden level." Like, because Sam tweeted at one point, like, "Oh, sell me all of your Sol." Like these things are so stupid that I think a lot of people forget that there's actually no I don't think there's like a perfect entry, or at least like there might be some lucky ones that you get a perfect entry in, but most of the time I think you just gotta close your eyes, click the button, and kind of just not get shaken out if it is at a good price, which I think it worth at a
I,
fine price at this
I think
point.
that's a good point as well around levels too, in that there's there's very few assets within this space that consistently, if you look out over a wide enough time horizon, set like an actual high or low on like a 5-year basis and then continue up from there. It's much more common to see like basically pick any altcoin in existence. Sure, it rips in your face, but then it also like kind of shits on your face in the opposite
Yeah,
direction. And that can happen over a month, that can happen over a year, and where you're just grinding it like all the way back down to where it was when you bought it. Um, there's Bitcoin and there's like a few other assets that you could call out that historically have kind of like grinded up and to the right over the longer term. And so um, that probably also lends itself to just the trading atmosphere. It's like if you're looking at kind of all of the shit coins that tend to rip in your face, like, I mean, it just lends itself to, this is a depressed time. Maybe I do want to be getting long because if it does rip, like I stand to still make a bunch of money.
yeah.
Um,
No, and I think my favorite is, and I've done this so much as well, is when like we're going up and to the right, and I'm like, oh, I should have bought like whatever it's 28K BTC. Oh, I should have bought, and it goes back down to 25. I'm like, yes, I'm waiting for 20 still. That's like, I don't know. Like, I think everybody does this. I'm sure that even like the really, because I'm retail, Danny. I don't mean to hurt your feelings. You're retail,
I'm
and
retail.
I can imagine like all like even the professionals are like constantly dealing with like trying to get past this and trying to say like, okay, I need to buy, because it's just so easy to anchor yourself to a price level and you're like, I have to buy it. Which is also why sometimes it's not great to like be in these chats and be on Twitter, because some idiots like, oh, there are people who made other people not buy Bitcoin on Twitter in 2022 because they were like, oh, like we need to hit the 12.5K level or
We
whatever it
gotta
was. And
we gotta liquidate Scalar at 12
we
and a
gotta
half.
liquidate Taylor, man. It's like BTC's at 16. Like, who are you, bro? Like, just buy the fucking token at this point and see what's good. And if like I don't know, DCA helps you, maybe that's the way to go. Yeah, a whole lot of, I don't know. I could do an entire. Maybe I'll do this for next time or the time after. Just like because sometimes I notice that I'm doing stuff that I very well shouldn't do. Like
Mm.
the I need to wait for a lower price thing is obviously a very obvious one. I did this with. I'm doing this with VVV right now. I don't know if you're like very clued into them, but they because I was like we talked about it on the pod. I don't know if you remember. And I was
Yep.
like, I have to buy this token. And then it went up to 8. And I was like, I'm not gonna buy this token now. I'll buy it when it goes back down to 5. And now it's at 5.8. And now I'm like, you know what? I'm
Now
not
you don't
buying
want to buy it.
I don't want to buy this token anymore. So it's like just tons of this stuff that
I think that's a natural feeling though when a lot of the assets. I mean, we talked about kind of the volatility, but also just the raw momentum and like kind of this, I don't know, the attention. It's similar. I'm not gonna say that it's a meme coin, but I think a lot of assets in the space move like meme coins in the sense that it's like you get the 1,000 active people who are moving money around in the shit coins in the space to all look at something for a week, and then when they all decide to stop looking at it, it could just grind down forever until it captures the narrative again. And a lot of the assets here kind of tend to work like that. So it can be hard to get on, riding the upward momentum and just like saying, screw it, like it's up 20%, like I'm buying right now, can often be like more effective than saying I'm going to look for, a bounce at some lower level, because that that bounce might never come. Like that might just be that downward momentum might carry it for a long time.
yeah, that especially in probably like right now when attention is like so limited and
Yeah.
you just don't want to deploy. I think at the yeah, I think unironically at the bottom it's sometimes better to, like you said, to just buy the thing that's like it's pumped 10%. You should probably just like get into it because it clearly has attention. Okay, I want to chat a bit about.
Yeah, let's talk about war instead.
I don't know how to do this one because I do actually want to talk about it, but I also like obviously don't know much about geopolitics in general. But I guess we'll, maybe like the best way to start this is Bitcoin's actually not dead. Um, it's a relatively big war in the Middle East that's happening. Last time this happened, I don't know if you remember. Actually, I think GCR tweeted last time this happened, right?
Was it Russia, Ukraine, or what?
No, no, no. It was Israel, Iran. It's like I believe that this is a good spot to
Mm.
DCA and some tokens or something. Um, I don't know. This time we didn't dump. I watched this video of this is what I want to talk about. Did you see that video of Dr. Jiang on? It doesn't work if you didn't see it, so I'll just have to describe it to you. So it's this guy, and he does this lecture in 2024, and he's a politics professor in the U.S. And he says he has 3 predictions: Trump will win in November, they will start a war with Iran, and U.S. will lose that war. So now he's doing a media circuit because his first 2 predictions have done well. But I can't stop thinking about the fact that this guy is like, he's clearly very well educated, but I can imagine there's a lot of people who could have seen that Iran war would have started. But now he's doing this massive tour. And I know we had this. The reason I've been thinking about this a lot is like, one of the reasons that prediction markets got popular, I don't want to bring up prediction markets again, week 4 now, but it's because it was supposed to like dismiss these types of people who are like sometimes get lucky. Do you remember like the whole thing happened with Nate Silver because he was wrong about his predictions about who was going to, he thought Kamala was going to win. We have all of this like data about Iran on prediction markets now, and it's been largely correct. But right now, everywhere I just see like again political experts and whatnot, like subject matter experts, etc. What I'm trying to say is that whole thing has kind of shifted away because 2 years ago that was a very big thing for prediction markets, if you remember. Like it was supposed to be the arbiter of truth and to show, but it's very clearly gone from that to like trading. And I just thought it was really interesting because we're once again, like 2 years ago we lost this credibility from like these subject matter experts versus now we're getting it back again, kind of, if that makes sense. Like we don't have Polymarket going out and saying, "Oh, we actually predicted all of this like 6 times," because this would have been a great opportunity for them. I'm like jumping around a lot, and I don't have a very coherent thing about this, but I just thought it was like semi interesting the fact that this happened. Also, I wanted to talk a bit about oil and HIP-3.
Yeah, I think that's fair. Maybe some thoughts I have on this, like, I think you're right. Like, we did see, um, what's the right word? Almost like a pushback against. There was definitely like a very clear pushback against like the elite, if that is the right word, but
Yeah,
like
like
the educated like science and like elite community. We saw this with COVID. We saw this, I think you're right, on like the like prediction of who's going to win the presidency in 2024. I think I don't know that I have anything strong to say about like where that trend is going, but I do just think I don't know, tides tend to kind of like, roll in different directions, and then at some point you start going the other way, and people change their mind, and once a trend maybe has gone on for too long. I do think part of the the interesting thing around like, oh, Nate Silver was wrong is that it's not really, I don't know, it's not I find it so funny, we've talked about this before probably, that like, it's not that the prediction markets are always right, it's just that they have the ability to constantly be updating the number.
Yeah,
Like if Nate Silver was putting out a new number every day based on the updated information from, the votes that were coming, like he would not have been incorrect at the conclusion of the election, he was just wrong at that point in time based
yeah,
on the info that he used as his input. And so I do find that whole point just like, it's just kind of silly. I'm not saying that, but I do agree that like the markets make sense for that reason, right? It's just a live open poll basically with dollars to decide what we think a chance of something happening is. So there is certainly some value there for certain markets like this, to have information related to events and occurrences and whatnot. But I agree with you. Yeah, we've seen kind of some changes there, and I don't know how to tie this into oil, except maybe by saying that I have seen. I mean, there has been a big the war tensions, obviously, and this issue around like the Strait of Hormuz being blocked and like shipment of things around the world being disrupted. Oil prices have jumped a bunch. I was looking at Polymarket earlier, and there's a bunch of markets right now for, will the price of oil reach, X price by June 30th, December 30th, and there's markets for like, $90, $110, $150, $250. Like they're really like trying to price in this like asymmetric rise in the price of oil. And tell me how
yeah.
that gets HIP-3.
Okay, I will tell you how. It is the third most traded asset on HIP-3 market. God, this I need to go. I need to start using dark mode more often. That's my like 2026 resolution. Crude oil is 24-hour volume is 400 mil. Open interest at 90. It is third after XYZ 100, which is Nasdaq 100 launched by Trade XYZ, and it is after silver as well. I also wanted to share this. This is actually a sneak peek from our analyst hours. I don't know if I'm allowed to show this, but anyway, this is like, I also think this is quite interesting. I did a HIP-3 update, and just the figures of these HIP-3 markets and how much they're trading, I think is quite insane. Bitcoin's 44% of total perps volume. Silver was 10% of total perps volume over on in February. That's kind of ridiculous to think about. XYZ 100 is 5.3%, or was 5.3% in February, and some of these other figures are silver was more silver was traded more than Sol, which like on Hyperliquid. Um, so these things are like genuine assets that are that have become increasingly more popular on Hyperliquid. Something that I think not a lot of people expected for it to happen at this rate, and the rate is actually pretty ridiculous because in December, first week of December, total HIP-3 volume was sub 1 bill. At peak, it was 25 bill. This is per week, and now the floor is at, I think, 12, maybe $14 billion per week. Insane growth, and it's really picked up. I think on everywhere. You know who was actually asking me about this? James Christoph. He was wondering if Ostium has ended up picking up a lot of this volume, and I think I already chatted about this on the pod one time, but I just want to like reiterate it. Ostium has actually gotten um, significantly higher volume, especially they did during the copper and silver boom, late Feb, mid Feb. I don't know if they are. I don't think they're doing as well as Hyperliquid is now with everything, but one perpstex that never got it was lighter, and I also mentioned this on an analyst hours I think last time, but maybe also on the pod. But just something to think about is like if the next evolution of these perpetuals dexes is allowing 24/7 trading for traditional markets, be it equities, be it ETFs, be it commodities, you really want to like long what is actually seeing trading volume from that. One caveat here is Hyperliquid is in growth mode, which means that they've cut down fees by 90%. So a lot of this like increased volume is actually not showing up in revenues yet. Revenues are relatively stable over the past 3 months. January, February, March, no, December, January, February have all been like around 50, 55 mil per month. So not tremendously impressive right now, but I don't know. I think this is where like majority of people I know who are super interested in crypto believe that crypto is going forward and fits our narrative as well, right? Like it's becoming the settlement layer. It's increasingly the back end of traditional finance, and I think it works in this sense for Hyperliquid and Ostium to an extent, which was surprising to me when I first saw the data. I was also a bit sad that Lighter didn't get any bump from it.
Yeah, seeing the fees come down makes sense to me. I mean, I do recall Noah having some questions about their revenue run rate and like relative to the amount of assets on the platform. And there was an interesting like, how can you be making, 20 to 30% annually of the total value that's even on the platform? You'd run out of customer assets at some point if you're making that much money off of them. So this, I think that makes sense, but it is interesting to see the growth just take off as a result of that. I'm curious, like how much have you thought through? Like it feels to me maybe there's a little bit of a multiple compression that needs to occur in terms of the market's feelings on where to price some of these exchanges, and maybe that's been actively happening, but that's maybe a hard part to grapple with.
Multiple compression here, as in across crypto, multiple compression such that. Is that what you're trying to say? Are you trying to say like?
Yeah, in the case of these perps exchanges specifically.
Yeah,
I mean, it could be offset by growth from like these new categories and more volume there, but if like you said, it's not being really reflected in the revenue, the growth of these volumes, because fees are coming down. So, is there a period here where we have to find maybe like a new norm at where they're priced based on, the growth maybe still be good, but maybe the revenue can't grow as quickly.
I completely get what you mean. I don't have much to say about this except for the fact that yes, probably there needs to be like it might be pricing in people might be pricing it the wrong way and that they might be assuming that when growth mode is off, so fees are back at 100%, the revenues might not boost up by whatever they imagine it's going to, because when the fees go up, trades or like trading volume might come down. On the other hand, I don't know about multiple compression too much because I actually think Hyperliquid is semi mispriced because of the data available about their token and the way that like I looked at circulating supply plus 1 year, which I think is at a 33x, which is not bad. And if like there's continued growth, I think that just means that the price just keeps going higher and higher. Um, what I more so mean is like there are people out there who are really bull posting hype because they're like, oh, it's at 11x or 12x because they're only taking circulating supply, which I think is wrong. Like I think the circulating supply figure going around is wrong. Um, and I think also there are like perma bears out there who are like, oh, like you have to price everything on full FTV, and it's like a lot of those tokens probably just won't ever hit the market. Um, and we've seen Hyperliquid be relatively active about this. Like I think either last month or the month before, and this led to like a pretty big jump in hype price. They lowered emissions by 90% to like lowered emissions to lowered unlocks to team members by 90%. So like they're clearly very cognizant of how much supply they want to bring on, like how much they want to increase supply by. Um, Long-winded way of saying I think you're right, but I think there's other things to consider here, which is primarily that if they keep onboarding more and more, because more and more retail trading volume is going up a lot, and Hyperliquid is one of the main venues for that. At this point in crypto, it's one of the main venues to speculate on equities. So I think if I don't really see it going down in the long term, from the figure that it is right now. I do think that the February bump was probably a lot, like the 25, $26 billion weekly volume because of the silver thing. I think that was too much. But right now, I think it's from this level of like 12 bill, I can see it just steadily grinding up. Although I might be wrong. Like it depends on their listing strategy, depends on how many fees they collect from the HIP-3 providers, depends on growth mode. Like, yeah, I don't have a great answer, so I'm just kind of rambling.
Depends on how much war activity we get. Seems like war is a good motivator for markets. You know,
Yeah, that's very
there's a classic. You know, the powers of the world have to have war to feed the defense companies, but it may be that we actually need war to feed the trading
HIP-3.
exchanges.
Yeah, I actually had a friend say something today, and it was that retail increasingly acts like they're hedge fund managers, and they're like, "Oh, I see a war coming on, so I'm gonna buy oil and stuff." Like, if you think of it, this is something that I think normal people did, and well, maybe like very active retail, but it feels like more and more people are very active retail, and I think the data supports this. Um, so yeah, like you have people who see war activity and they're like slamming into oil, and now oil is at $93. A crude oil is at $93, I think, in crude. So yeah, war is great for Hyperliquid.
Yeah, I think it's like an artifact of this shift that's been going on for probably a few decades now, of like a kind of passive management domination of the markets to like more active. And when I say active management, I just mean exactly what you're saying, in that, like, you see the numbers around active retail traders and increasing sort of year over year in their share of trading activity. And so, yeah, I mean, if those folks are just like following the news like anyone else is, they can make a decision to say, hey, I guess I'm going to go long oil here, or short oil here, or, I'm long war fears or short war fears, something along those lines. I'd agree with you. I feel like we are seeing that be reflected sort of generally within markets. And maybe that explains just like, gold had kind of well, maybe silver is the better comparison, in that it had a pretty insane run. What was that, like a month or two ago now, and a massive blow off top there. And that's, I think, for a long time been kind of like a favorite asset of like maybe too deep in the weeds, like retail speculators saying like, oh yeah, you got to be long silver. It's the second best after gold, and someday it's going to get its crazy run. And I guess that did happen, but yeah, I guess it just makes you wonder, like, to what extent that's just, yeah, I wonder to what extent, like, just more active retail traders in the market, like, kind of exemplifying these like crazy speculative moves, is like playing into some of that.
I mean, the market's definitely not what it used to be for 20 years ago. I think you can
It's much easier for anyone to participate in that as well. It's not like you need to call your
yeah,
broker and like it's going to cost you, $15 to place the trade. You can just you got your phone out and you can just freaking get
yeah.
long on your favorite app.
Yeah, one thing I will say is that I think I know a few people who work through brokers, and I think it's the funniest thing in the world when you're like reaching out to your broker to buy stocks for you and sell stocks for you. Because use a fucking app, dude. Who are you? Um, yeah, for better or worse, we've allowed all types of people, everybody, to gain access to the intricacies of the financial system, specifically buying and selling stocks and securities. We'll find out what the effects of it are in 10 to 15 years, maybe 20, the same way that we found out what the effects of tobacco were like 20 years later. I don't want to say it's the same thing, but the funniest is when you see like after crypto crashes, you see all of those guys go on like whatever, like The Verge or Wired or something, and they're looking at the camera like this, and they're like, "Yeah, I lost all my money in crypto," because it like a crypto crash. Do you remember? I think there was like a very big wave of these post COVID, and they were like, "Oh, like I started day trading before COVID, and then COVID hit, and then all markets went down 60%." It's just people like looking really sad at cameras. Um, I wonder if I wonder if that's a general experience. I imagine it is from like people that I've chatted to, and I wonder if it was the right thing for everybody for us to democratize finance this much. It's kind of a dark turn to an otherwise happy day, but apart from the war. But
When AGI takes everyone's jobs, we can all be employed in the prediction markets trenches. So
it's so funny that like everyone's like, oh, when you want to be owning assets when AGIs take all jobs, like when if AGIs take all jobs or robots take all of the jobs, it's like it's done, dude. There's no like I don't know how you can even make yeah. I don't know, something that's very interesting to me that I haven't been able to think through yet. I have a few more topics. Talking a little bit about we already kind of covered this, which was the settlement layer. This was actually also from our analyst hours. Now I'm going to kind of butcher. Kunal wrote about them. I don't think it's out yet, but it will be out. So if you're not a Blockworks Research subscriber, you should subscribe to read more about our thoughts on Canton. But I pitched this to you before today's episode, Danny, and we both said the same thing, which is that we agree with James Christoph's thoughts, which I'm sure he'd be very happy about. But yeah, I think like there's not like what I wanted to say here was this: in the world where TradFi uses us as tokenization rails or settlement layers and trading on the back end of financial infrastructure. Unfortunately, I feel like they will choose Canton and not Hyperliquid or Solana like some people want. I know you agree with this as well, right?
I think I have a more neutral view in the sense that I think I could see any outcome and it wouldn't surprise me, in the sense that I don't know, a lot of effort has gone into building these large blockchain networks and ecosystems, and yet, despite the number of assets on Ethereum, despite the amount of activity on Solana, you look at the like kind of core token asset at the center of it, and I think they still have like there's still problems in those models from like wanting to own that and it being sort of like having some sense of value accrual is like a problem that's not quite been solved for. So in the sense that, you know, Ethereum itself or like Solana itself is not necessarily like directly a profitable thing, I could see a world in which a bunch of financial institutions say, well, hey, if there's this network that's just going to operate basically unprofitably and people are willing to kind of like sort of pay into that to keep it running, why wouldn't we just take advantage of it? Because that means we don't have to spend money building that ourselves.
And
But I
this
could also see
ego,
the same. I could see the reverse argument for something like, like a can. It doesn't have to be Canton, but it could be any similar sort of like, uh, you know, large grouped
yeah,
amalgamation of businesses that like form to make a network that they sort of like maybe control some of the rules around. If there's enough of a reason or an impetus to want to have like full control over maybe like what are some of the core rules are for how things operate, then maybe there's enough of a reason to do that. But I don't know. You're trading two things, right? Like on one side, there's enough of a proof point that some of the blockchain technology makes sense and has a use case because there's at least X billion number of dollars that people are willing to deploy on them today, and we haven't seen necessarily the same from something like a Canton. So but I could see things go either way. Like I think it's just interesting that like this sort of open source decentralized blockchain network is something that I don't know if you were to ask any business like, hey, do you want to run this and kind of take on all the cost of maybe having to issue a token and like deflate it and maybe operate it as sort of like at a net loss to then kind of own everything else on top of it. I don't know. It's an interesting question on whether they would or wouldn't, or whether it would even be possible because at that point, if it's like actually owned by a single entity, it sort of loses some of the properties that it had in
yeah,
the first place.
yeah. I largely agree with you, but I think in particular because you kind of hedged everything you said one way or another, which I respect a lot. But one thing I will say is, to me, it's like when I think about these things, I think Ethereum and Canton make sense as competitors, right? It's like you're issuing. It doesn't need to be particularly fast finance. Like from what I understand, these guys are mainly issuing things that can move a little bit slower. That you just need like set background on, and like trade settlement. I think I don't know, Solana and Hyperliquid want to do it, but I also think probably Robinhood wants, like Robinhood Chain wants to do that as well, right? So like that's how I've been thinking about it. Um, I think the experiments that were done by providers like Avalanche and JPM Onyx or whatever it was that they worked with. Do you know what I'm talking about? That stuff just never worked out, and I think the Canton model makes more sense because if you can get buy-in from I don't know 15 banks, it's much better than having just like one bank run its own infrastructure because that's very heavy. Um, I think they did the right. I think they did it the right way, which is why it's like kind of scary. I am very happy that there's a Canton coin though, because you can actually buy it. I haven't, but I also know like Layer Zero's trying to get explicitly into this now as well, like with Zero Blockchain. Um, Kind of ties into the whole thing of like, there's no need to doom and gloom. I think everything's going to be fine over the next. Like, there's tons of these coins that you can buy that are either building towards becoming the settlement layer for trades and financial transactions. These things are actually being adopted. Um, I didn't add much to what you said. I think particularly because I agree with you.
Yeah, I think part of it as well is that there's things that are different but also the same in terms of TradFi and DeFi operating systems as it comes to finance. Like, since there's not necessarily like, Solana or Ethereum are maybe the chain, they're not necessarily like they don't have full control over who could or could not list an asset, right? And so it's like they don't get to then capture some of the other revenue streams that maybe like a NYSE or a NASDAQ would get to. They don't get necessarily like a listing fee or other kind of technological service revenue or providing market data, right? There's just like a variety of companies that choose to build on top of that can then go out and offer the best product and receive that revenue instead. So there's a difference there. I do wonder to what extent. Yeah, I don't know. There's just this constant trade off in these things of like if you look at a Robinhood or like a Coinbase and they say, hey, it's worth it. We should build our own chain. We should make base chain. We should make Robinhood chain. Like clearly for them, they have enough customer lock in to where they think they can get individuals to deploy assets and do some trading activity on there, and maybe they think there's like a broader network effect that can then happen where it pulls in other outside capital that's like currently in DeFi, and there's some value there. But there's a lot of competing forces to where I think it becomes quite difficult to like have a clear and accurate picture of the future in terms of if this brings down the general cost of operating some of these financial services, then it's like they're in one way they might be like losing revenue from customers who would have paid more in the more classic or TradFi system that are now doing it on this newer system. But I guess if that enables you to bring in more customers, more volume, more activity, it can offset itself or maybe take down an incumbent. But obviously not, the world is always shifting. If these newer entrants or, blockchain technology enables you to take down kind of the some of the prior giants and take some of that revenue for yourself, even at a lower take rate compared to the old system, then it's a win for you and maybe not necessarily a win for them. So, but yeah, perfectly hedged as always. No strong opinion in one direction or the other. I do think clearly we see that there is enough interest in like, I think something of an inevitability here, just from a technological standpoint of, having some of these benefits around instant settlement, the cash is there, no need to work through, T+1, T+2 settlement, things of this nature, instantly crediting accounts. The trading can be happening constantly 24/7. There's benefits from like a customer and a platform standpoint to where, I don't know, a lot of these institutions are seeing the value in competing over that. It's just, I think longer term, it's a question of who actually wins. And I think customers will probably win in some way just because
it's getting better.
There's better benefits for being a user of these systems. But will all of the incumbents and new entrants all win together? That's probably not the case. It doesn't usually. No. We'll probably have a few big winners, and I think it's really hard to say who explicitly those will be at this point in time.
One thing I want to say here is, you brought up like that NYSE, they take listing fees, they sell data, they have different ways of monetizing their product, and chains just don't do this at all. And I think the general idea so far has been like, well, chains can monetize in other ways, it's fine. But there's nothing that says that chains can't monetize in the same way that these things do. Like at the end of the day, they could also be doing the data side and like selling data access. I don't think that's a crazy thought. And more specifically, I think like I fought with Daniel Smith over this, like maybe a year ago, maybe a year and a half ago. It was Hyperliquid. When you pay a maker or taker fee, or I guess whenever you pay a trading fee, that's you're making a transaction. So that's gas. Like there's no gas cost in this typical way of to send a transaction. But if a transaction is putting in an order, then you're paying gas, right? So like the way that I think a lot of people think about L1s is like, oh, you have to pay a certain amount of gas and it has to be in a native token and it has to be like be a transaction. So the general point that I'm trying to make is Ethereum and Solana and whatever incumbent or whatever like new chains are coming up don't have to just monetize through the customer or like through the user by making them pay gas. There's a million ways to do it. And I feel like it's relatively unexplored. Like we came up with a way to monetize a blockchain and it's like, that's it. No one's ever tried to iterate on it. No one's ever, we're seeing some now, like Mega ETH has USTM. Hyperliquid has their general fees as well, which I would say it's like still relatively just the same thing. But no one's really tried very hard. You know what I mean? And it's kind of a shame because I feel like that is a very interesting part of. At one point, the technical side will be solved, and I would say for the large part, like apart from ETH block times being too long, it's not a bad chain. Like I think it's good. Cut it down to 2 seconds. I'm sure you'll do it in 4 years, but if you cut it down to 2 seconds, I think it's fine. I think it's okay. Like Solana works fine. But I feel like they really haven't figured out. And you should talk to Ian about this on Lightspeed because he has some very interesting thoughts on it. I would actually love to bring him on over here as well. But that's, I think, the main missing thing at this point, which is they're charging users through one mechanism when there are surely much better ways to figure out the economics of these businesses at this point. Like what we're doing right now is probably not the right way to approach it.
Yeah, I think we have talked with Ian recently about sort of the value accrual of blockchains. I agree with a lot of points there. I feel like there are two big thoughts that come to mind for me. One is that you have to always maybe ask yourself the question of, is now the time to really turn on the revenue engine and like stop sort of like subsidizing for growth? And I think that's probably a real question for these things when you have like massive TradFi incumbents who could within the next 6 months say, hey, we've spun up a network for all of our clients, and they can use it. And so I think there's that open question of like, you know, if an Ethereum or if a Sol or any other network says, hey, we have all these like 9, 10, or maybe just a few different ways where we're going to like nickel and dime you now additionally so that we can kind of like figure out the economics question here. Like how much of the activity does that turn off?
Yeah.
Just because of what the active like incentives are today? And does it drive them to other solutions? But then
Yeah.
two, I think to your point about, you know, these chains being able to monetize in more ways, being able to offer more services. Like I agree with that point. And I think part of it is there's this path dependency still to this like idea that everything in blockchains like needs to be this decentralized ecosystem, and you just like you can't have one like a business that runs it all at the center, because that's like no better than the existing solutions. But I mean, it is still better if you don't have T+1 settlement and, you know, you can
Yeah.
instantly make transactions. So I do agree with you. And I mean, I think there is a space there still for someone to like maybe compete more directly in that realm of, you know, you could take something like an Ether, a Sol, or even a Hyperliquid, as they've kind of decentralized more, but you could still take a more centralized approach and say, okay, you know, we control listing, we control the trading, we control the data, we control this. And maybe that kind of is what something like a Canton is, although maybe not quite. That's, you know, it's still more of like the consortium approach. I think you could probably still have this
Fine as well. Yeah.
more opinionated, centralized decision. But I don't know. I see. I think the main thing that I see is like when you get to the mass consumer or like user of financial products, like I don't know that they care as much about any of this stuff as the like 10,000 of us in this industry do today. And so like to me, it just wouldn't be surprising if it's like someday in the future they're just using their Apple phone and they can just send money to someone. Like they're not going to care if that transaction was settled on Ethereum or Solana or Hyperliquid or JP Morgan, you know, clearing chain. It just doesn't matter to them.
Yeah. No, I agree. One thing you mentioned was like monetizing the consumer. Another thing is like you could charge. I said this to people and they always call me an idiot for saying it, but you could charge rent to some of these apps. Like we're now getting to a point where people don't want to use a billion apps. Like very clearly, there's 4 or 5. No, people don't want to use a million chains. Very clearly, like there's 4, 5, 6 chains maybe maximum, and out of those, there's like 2 to 3 of them that are very dominant. So at some point, this will just start getting smaller and smaller. And every cycle, some of these chains die. Like some of the chains that we had 2 cycles ago didn't even come back last cycle. Polygon, Avalanche. These are,
Yep.
they didn't do well. They just straight up didn't do anything. So these things died out. So every cycle, it consolidates more and more. And then eventually, I think chains will be at this position where they don't have to, it makes no sense to have, I don't know, whatever, like 150,000 customers on Solana. It makes way more sense to have, however, how many relevant apps are on Solana? 10, 12? charge them a portion of their revenue. It's much better for you. I think it's like, because then I don't know. I talked about this with people. I'm like, oh, it doesn't make any sense. They'll just leave. Like, yeah, maybe now, but I don't think next cycle they'll leave, because at some point you cement yourself as a chain. I'm cognizant that we're running over time, and I want to do something very important. But first, I want to let you speak.
Yeah, I have one last thought on that. I feel like we have seen the push and pull of these ideas. Like in Solana right now, I actually feel like we're seeing a bit of a centralizing trend happening where you've had things like, you know, Jito tips and like the block builders and these transaction landing services like kind of they've made revenue at sort of like at the expense of the protocol and made things more complex. And we're seeing a push in the opposite direction where it's like, okay, we're going to have Alpenglow and we're going to do MCP. And then therefore all these like different ways of ordering blocks will be all decided within the protocol again. So it's like kind of re-centralizing that thing, which has been kind of a, you know, an open market for a time. So that's like a specific instance where we're seeing that push and pull. And I do agree with you. There's like these other ways. It's like you don't have to just charge the consumer. You can charge the businesses that operate on top of you. And that's kind of what I meant when I said it's like, if you control the data, if you control, there's a point now that I would maybe the last point I'd make is that some of the blockchains that already exist today, some of the incumbents, it's like they're already at a point where it's become difficult for them to start going in the opposite direction and say, you know, for Solana to come out and say, oh, Helios, you guys have done such great work. Now we're going to build our own service that does exactly what you guys do. And maybe we'll undercut you and like we're going to try to wipe you out of the picture and just take back what you. There's a difficult part where it's like, one, you have very talented teams that are like already doing that. And so one, it would be hard to compete with them. Or even like if you have to make a protocol like vote or governance decision to do so, like that, it might even be hard to get a yes, right?
Yeah.
So I do think in some ways there are certain things that are kind of locked in, but to your point about like rent and some of these other ideas, like, you know, it's possible. I think there's a direction we could head here. We just have to see, you know, decentralized governance is a beast. So to get an outcome like that is you got to get a lot of people on board.
Yeah. One more thing, like apart from governance, all of these chains are permissionless, which doesn't work very well with legal documents. Like you can't strong arm somebody into commercial agreements or like saying, "Oh, we're just gonna like work." There's a lot of things about
the
way that crypto evolved that has made it very difficult to, because a large portion of how businesses make revenue is through commercial agreements. And you just can't make some of these things on, like you can't have vendor lock-in, or like it doesn't work.
And the other part of what these chains are today too is like it's an agreement on like a number of validators to run the same software. And so like if there's some, in the same way that like Bitcoin kind of had and ETH have had their kind of moments where they've split in the past, it's if you offer up a big enough change at like one moment in time, you know, maybe half the validators on the network say we don't want to run that. Yeah,
I'm not gonna do it. It's just, I don't know. Crypto is beautiful because it's very chaotic, but it's also horrible because it's very chaotic, and it's very chaotic because of the way that it's developed. And there's all of these like tiny little issues that just are so annoying, and in regular life you don't really have to deal with it. Like, can you imagine a business with like half your vendors are like, oh, like we actually don't want to do it. Fuck you, dude, it's my business. Like you can't do that. Okay, I have
big news.
This week's analyst of the week is, he did very, very well on your podcast, Danny.
Wow. This is fantastic news.
Mr. Toma, please claim your prize at the Digital Asset Summit in New York, March 24th to 26th. Make sure to be there. I think this is the last week you can buy tickets.
Do they close them off next week? I mean, it is like 2 weeks out now, so we're getting pretty close, yeah. Oh, there he is. Let's go.
There we go. Analyst of the week is Toma. I don't think we're actually flying him out to DAS because he's too junior, but you should still go because Danny will be there. And use code 0x200 to get $200 off your ticket. But yeah, huge shout out to Toma. He went on the podcast. He did some Solana reports, and he's generally been very good. So bravo, Toma.
We talked about on-chain equities. You would have loved it. You would have said HIP-3.
I would have liked it. I would love to be invited on Lightspeed sometime. I don't know if that sounds
We
like
could
possible.
do you want to?
Hey man, I don't know if that's something possible. I'd love to go on there with Carlos and just disagree with everything he says at all times. There's something about Carlos that makes me want to disagree with him, and I think it's particularly because he never says anything that he's not sure about. Like he does a lot of research, and B, he won't like speak out of his ass the way that I do, and the way that you also do sometimes. Like I sometimes catch you speak out of your ass, but what you do is you always hedge, which I think is great. But I don't. I just say it. But Carlos never has to hedge because he always speaks the truth. Those are my closing thoughts. I love Carlos. I love Toma. I love Danny. Guys, thank you so much for tuning in this week. Again, a shout out to my lovely producer, our lovely producer, Steph, for getting married. Yeah, very good. Okay. Enjoy your weekend. Thank you for listening. And I will see you all next Friday. In 2 weeks, we're going to have some CMT digital guys on. So that'll be fun.
Yeah. Matt.
No, not Matt.
Not Matt.
I wish you didn't say Matt because I forgot to invite Matt. So now I have to. Well, not now I have to invite Matt. I wanted to invite Matt.
Sorry, Matt. It's not you. You're not coming on. I don't even know who it is.
There's only 2 of them. Well, I think there's like more of them, but I only know 2 of them. Okay. Anything else you want to say, Danny? Or can we shut it off? It's very awkward end.
We can shut it off. I agree. Toma, Carlos, they're doing great stuff over on Lightspeed. Carlos is always very sure of himself. I do like pushing back against him though, frequently, as you mentioned that you said you would like to do. I think it's good to play devil's advocate against someone who has very strong viewpoints about things. I feel like that one, it makes you a better thinker. But 2, it also just makes for more interesting conversation.
Yeah, definitely. And it also is like really funny to see Carlos kind of stressed out a little bit.
He loves stressing you out, Carlos. Former analyst of the week.
Former analyst of the week. This week is Toma. Okay, have a nice weekend, everybody.
See you guys.